Business credit myths debunked. Look, in this training, I'm going to teach you some of the most common myths that are out there in the business credit space from overnight gurus that will teach you things are not possible and tell you how they actually are possible using business credit. All the things you've heard about business credit, whether true or not true, are going to be clarified right now during this training. So let's debunk some myths and let's decode the power of what business credit can do for your business to fund itself. With the rise of overnight gurus talking about business credit, there's so much misinformation in the space. So what can business credit do and what can it do? Which of these myths are accurate, which are not? Let's debunk them right now. Starting with the fact that time in business actually controls your ability to get approved for business credit. Well, this one is debunked. That is completely not true. Look, business credit can be obtained for a brand new startup business. It doesn't matter if you've been in business for 10 years or 1 day, you're still able to build business credit following a proven series of steps, and you're still able to get the same amount of credit as a brand new business as an established business. So don't think that time in business controls your ability to get approved. That is completely not true. We're debunking this one. Now on to the next. Your personal credit has zero impact on your ability to get business credit. Look, there's a lot of people out there that link the two together and say that in order to get business credit, you have to provide a personal guarantee. You have to provide a personal credit check. That is absolutely not the case. If you follow the right series of steps when building business credit, your personal credit's not even looked at, meaning credit issuers aren't even doing consumer credit polls to determine your ability to get approved. That's the beauty of business credit, is it gives you the ability for your business to fund itself without relying on you. What that means without relying on personal credit checks, without relying on inquiries on your personal credit reports, without relying on personal guarantees. Business credit can be built outside of all of this because it's a way for your business to fund itself, where your business can build a basic credit profile and score and then use that to qualify for more credit. And as the profile continues to build, you get more and more credit, giving your business the true ability to fund itself. Which brings me to myth 3. Business credit is automatically available to you just because you have a business. That is completely untrue. Look, business credit has to be built the same as consumer credit has to be established. It's just way harder. And the reason it's harder is because nearly 90% of vendors that issue business credit don't report the credit they issue to the business credit reporting agencies. So that means only 1 out of 10 accounts that you actually get credit from a vendor will actually report on your business credit reports. So you have to strategically build business credit. Just because you have a business doesn't mean you're going to walk in your bank and get a credit card or walk into any other source and get around personal guarantees and credit checks. The key is to build your fundability, make sure your business is structured and set up the right way from the beginning, and then get some starter accounts to establish an initial business credit report and score. Once you have that, you can then start qualifying for more credit, and then more tiers of credit become available and open up for you the more credit you have established reporting on your business credit reports. So don't think just because you have a business that you have business credit. It takes a little work, but well worth it when you're getting $10,000 to $50,000 credit lines without a personal guarantee and without a personal credit check. Speaking about credit check, another myth that I commonly hear is that business and consumer credit scores are similar or even the same. That is completely not true. We are debunking this myth right now. First of all, some of the reporting agencies are similar. In the consumer credit reporting world, we have TransUnion, Equifax, and Experian are the main 3 reporting agencies. Well, in the business world, we also have Equifax and Experian, but in addition, we have Dun & Bradstreet. And Dun & Bradstreet is the largest reporting agency in the world. They're bigger than any other consumer or commercial credit reporting agency. Now, the business credit scores are very different from consumer credit scores in a lot of different ways, but let me teach you the most important one. Business credit scores are primarily based on one thing: how you pay your bills. All you need to do to get good credit scores is get accounts that report to the business credit reporting agencies, pay them on time or early. That's it. There's nothing more to it. Unlike consumer FICO scores that rely on how long you've had your credit profile open and your mix of credit, how your utilization and how you pay your bills, all these other factors, business credit scores are based on how you pay your bills. So if you pay your bills on time or early, you get good scores, which means it's very easy and fast to get good scores and then use those to start getting large amounts of business credit where your business can actually fund itself. And one more myth: the size of your business determines your ability to get business credit. Debunked. That is completely not true. Look, it doesn't matter if you're a brand new startup business and a solopreneur where you are the only member of your team, you're still able to build business credit as if you had a 100-member team. Business credit is all based on how much credit you have on these reports. So as long as we get the business set up where it's fundable, we get some initial credit, and then continue to add more and more credit that reports to the reporting agencies and use that credit, that is what opens up your ability to get higher credit lines and more types of credit and financing as well. So again, the size of your business does not matter. How long you've been in business does not matter. What matters is following a proven series of steps to be successful. Do you want to grab those steps right now? Well, if so, then check out the link in the description of this training and get our guide on the fastest way to build business credit for your EIN that's not linked to you personally. And if you got value from this training, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.